say in 2035, somebody's going to ask you, would you go back to 2025 and buy Bitcoin for $125,000? Make sure that you're in 2035, make sure that you're saying, I already did that. The system is built on this fake money, and most people haven't even imagined what would happen if we replace the money completely. And what I would say for Gen Z is accumulate that opportunity right now.
Welcome back to the Orange Peel Podcast. I'm your host, Nikki, and today's guest is someone who's lived inside the system that most of us are trying to understand. Rajat Soni is a CFA who has years of experience in finance and now focuses only on Bitcoin and financial education. We're diving into what it's really like to go from a traditional finance lens to the Bitcoin standard and what all of this means for our generation and those of us interested in going into finance. Rajat, thank you so much for coming on. I am so excited to get to know you.
Absolutely. Thank you so much for having me. Looking forward to this conversation.
Of course. So let's start all the way at the beginning, even before the orange pill. What drew you to finance, and what was life like in the industry?
Honestly, it was so in high school, I took a couple of courses that, they were completely by accident. It was basically just courses that they needed me to take. I needed to fill my schedule up. And one of them ended up being an accounting course, and I ended up doing really well in it. So I guess it just turned into me going into finance and doing more of the accounting side of things. After high school, I went to university. I did an undergrad in finance and an undergrad with a major in accounting and a minor in finance. And I did the CFA. I worked in finance for a little while. I worked in different parts of the industry. I worked at the bank. So I was working as a financial services advisor at one point, like in the branch. And then I worked in TD Asset Management, where I was managing bond portfolios. It was interesting, but at the end of the day, what you're doing there is you're helping wealthy people get wealthier. So I kind of wanted to leave that system. I didn't really want to do that anymore. It wasn't fulfilling. I didn't really get anything out of it. So I started posting on Instagram about just personal finance, about investing, saving, index funds. And at some point, I came across a post about the Bitcoin standard. So I listened to the audiobook, but before that, my coworker told me about Michael Saylor and his podcast, and I listened to a couple of his I didn't really get what he was saying, but then after that, I read the Bitcoin standard and I really got into it. I feel like this was probably one of the best moves that I've ever made in my career, in my personal life, in really everything, just because now I know that this is the best asset in the world, and just studying it and putting in the time to learn about it has really changed my view of the world.
That's awesome. That's so awesome. And I wanted to ask, was there, a reason that you started looking into Bitcoin, or is it just something that you came across and just realized that this is actually, fixes the problem that you were talking about helping the rich get richer?
So I started off investing in index funds, and when you invest in index funds, I guess it's just normal to think that, oh, in 40 years or 35 years, you're going to have $1 million, right? And I'd post about that on Instagram, and you constantly see posts about that, how it'll take this long to get to $1 million, it'll take this long to get to retirement, whatever it is. But I would get a lot of comments from people saying that the real inflation rate isn't 2%. And this is back when I was just fully in the matrix, I guess. Everybody was thinking, oh, inflation is 2%. Your index funds are going to give you a 10% return. And I would ignore them, and I would think, oh, these people are idiots. They don't know what they're talking about. But it actually turned out that I was the idiot, right? I had no idea what I was talking about, because I had just fed into whatever the BS is that the financial system wants us to think about, right? And the financial system relies on more and more people just investing their money into index funds, into stocks, so that, those assets keep growing. The wealthy keep getting richer, because a lot of the wealthy bought a lot of these stocks that are in index funds at a much lower price. But now we're pumping their bags, right? By buying the index funds that we're told to buy, we're just pumping their bags. We're buying Amazon shares, we're buying Apple shares, we're buying all these companies. But all the insiders are able to give their shares to us because they initially got them for a much lower price, and they're just using us as exit liquidity. That's the way that I see it now. Before I couldn't see that. Now I see that. And I feel like Bitcoin. So what really got me to think about Bitcoin was the much higher returns, right? Instead of retiring in 35 years, why wouldn't you want to retire in like 15? It makes no sense to keep working and giving your energy to this system where you're meant to be poor. The majority of people are meant to be poor. They're meant to be broke because the system doesn't work otherwise. And I think Bitcoin was just a way to get out of that. It's the only escape hatch. It's the only way to get out of that system where the governments and the people who run the system want you to be poor. And with Bitcoin, you don't have to be.
Interesting. So, how do you view Bitcoin now? What does Bitcoin mean to you?
There's a lot of words that can describe. So let's say, for example, Bitcoin is hope. I agree with that. Bitcoin is money. I agree with that. I think that Bitcoin is just a half. It's half of every transaction. I think that's probably that's not even me. I've heard this from other people, but I think that's probably the best way to describe it because that shows you that it doesn't have to be hope. It can be used for anything. It can be used to buy whatever you want to, right? You can use it to buy a house. You can use it to buy a car. You can use it to sustain your lifestyle. You can use it to improve your lifestyle. You can use it to destroy your lifestyle, right? You can gamble with it, right? Or you can buy shitcoins with it if you want to, and you can lose all of your money, or you can buy drugs with it. You can do whatever you want to. Bitcoin is basically just half of every transaction. What it'll do over the long term, though, is I think that people with low time preference, and low time preference is people who prefer to delay gratification rather than people who prefer instant gratification. That's high time preference. So people with low time preference who hold on to their Bitcoin are eventually going to see that they're building wealth. And this thing allowed them to do that because they just held on to it. And that's what Bitcoin is to me. So to me, Bitcoin is just your way to get whatever you want out of life. So it allows you to essentially design your life the way you want to. If you want your life to be, let's say, living in a certain country and that's all you strive for, then you can do that with Bitcoin. But if you want to keep growing and you want to keep getting better, I know people who have a lot of Bitcoin and they keep accumulating because it's the best asset in the world, right? And they want to keep growing, and it's a race between them and themselves. On the other hand, other people compete with the other people in the system. That's essentially what the stock market is. The stock market is just you investing and competing against algorithms and competing against politicians, and it's a really broken system. It's kind of like you're being trapped into investing in what I guess the status quo is with the stock. But with Bitcoin, again, you have that freedom to really do whatever you want. And like I said, design your life the way you want to. So that's what it is to me. It's a way for me to, it's basically a key to unlock the future that you want.
Yeah, no, I think that's a great way to put it because I'm very new to Bitcoin. I only started learning about it this year, and I
Wow.
only really started getting into it in like July-ish. So the thing that's, clicked for me is that Bitcoin is allowing me to have a future that goes beyond just graduating college and then going into a 9 to 5 job somewhere in tech. And, with AI coming in and all these changes happening around the world, we don't really know what tech's going to look like anyway. So I want to bring it back to, your finance background a little bit and ask you, why do you think so many people in finance or on Wall Street still dismiss Bitcoin, still view it as kind of like a fake internet money thing?
I have a spreadsheet that kind of explains it. Let me just pull
Oh,
it up
yeah.
here one second. I think the reason why I think the spreadsheet is perfect for this is because it shows you how the world is seen by wealthy people, by um, I guess the people who are controlling the financial system today. And on the spreadsheet, I basically have a bunch of, let me see here. I have a bunch of formulas that wealthy people use to describe assets. Let me just find it here. But essentially, they're looking at Bitcoin as a way to earn cash flow when Bitcoin is the cash flow. I think that's the key here. Most people don't see Bitcoin
Interesting.
as they don't see it as the cash flow. They see it as just they see it they see oh, here it is. Okay, so they see it as a part of a portfolio where it's competing with other assets. So let me share my screen. I finally found it. Screen. Okay. There it is. Okay. So basically, we have certain methods to value the legacy assets. So stocks, real estate. I don't really consider bonds to be a great asset because you can't really make money from it. With stocks, basically, you have discounted cash flow. So what people are looking at here is the amount of cash flow that you can make from a stock. So you have Nvidia, for example. Nvidia will produce a certain amount of value and they'll give you a certain amount of cash flow. So what investors are doing is they're bringing that cash flow to the present. They're calculating the net present value of the cash flow that company is going to earn. But Bitcoin isn't a business. So you can't look at Bitcoin like you would stocks. You can't look at the discounted cash flow method You can't look at the net present value because Bitcoin is the cash. So the way that I see it, Bitcoin is replacing the cash flow. So the CF, this is a discounted cash flow formula. So Bitcoin would replace the CF. It would replace the cash flow, the discounted cash flow. But people are looking at it differently. They're looking at it the wrong way. They're trying to calculate Bitcoin's value by using this formula when Bitcoin is supposed to be a part of this formula for every asset. So over time, the way that I see it, every company is going to be generating Bitcoin. They're going to be generating Bitcoin revenues. And Wall Street hasn't caught up yet. Wall Street is still thinking of comparing metrics between companies. Like they're looking at the PE ratio of Bitcoin when it doesn't have a PE ratio. It doesn't have any earnings. It's not a company. Then they're looking at something like enterprise value to EBITDA. So this is another formula that shows you the market capitalization versus the debt versus all these random different metrics that don't apply to Bitcoin. They're using these metrics to value Bitcoin when you can't. It's not a business, so it doesn't have assets and liabilities. Bitcoin is just cash, right? Then they're looking at earnings multiples. It doesn't have sales. So how are you going to calculate its price to sales ratio? All these formulas don't work because Bitcoin isn't a traditional asset. It's not a stock. It doesn't create cash flows. You can see real estate. There's the income approach with real estate. You can look at the sales comparison. There's all these different methods to value legacy assets. And the smartest people in the world, like Warren Buffett, they're using these methods to value Bitcoin when it doesn't work that way. It's not this. Bitcoin isn't stocks. It isn't real estate. Bitcoin is money. So I have another thing down here. So how you would value money is based on its functions, how it fulfills the functions of money. So money is supposed to have certain functions. It's supposed to have certain characteristics. And I have a spreadsheet on here which shows you the characteristics of money as well. I can't find it, whatever. But you value a form of money based on how well it can be a store of value, how well it can be a medium of exchange, how well it can be a unit of account. For example, there's the characteristic of money, fungibility. Every unit has to essentially be the same. So it has to have the same functions. It has to have the same characteristics. If every unit isn't the same, you can't use it as a unit of account. So for example, you can't use diamonds as money because a 1 carat diamond is going to be worth orders of magnitude more than, let's say, a 0.5 carat diamond, because 0.5 carat diamonds are a lot more, they have a lot more supply and they don't have as much demand. Whereas a 1 carat diamond would have a lot more demand, but it doesn't have as much supply. And again, a 1 carat diamond wouldn't be worth 10% of a 10 carat diamond. That 10 carat diamond may be worth 1,000 times more or 10,000 times more. And again, it's all subjective, right? So with Bitcoin, every unit is exactly the same. So you can use it as a unit of account. You can use it as a medium of exchange, because if I tell you, give me 1,000 Satoshis, you know exactly what I mean by that. With, let's say, for example, stocks, every company is different. With real estate, every house is different. Every house has different characteristics. So you can't use them as money, whereas Bitcoin you can. And then you can also see the second way that I like to think that Bitcoin should be valued, or money should be valued, is based on the inflation rate. If the rate at which a form of money is being produced is constantly increasing, you can't really use it as money, because whoever saves in it is going to be, they're going to be screwed. You can't save in a form of money that somebody else can just print, right? And then there's also purchasing power parity. So the price of a basket of goods in one currency versus another. Again, this applies to, let's say, fiat currencies. With Bitcoin, you know that your purchasing power is going to keep rising and rising and rising. And at some point, you're going to be able to sustain whatever lifestyle you have. Whereas with, let's say, stocks, the company can change over time. Stocks have a lot more risk. If you buy real estate, the location that you buy that real estate in could get a lot worse. Let's say, for example, next to your house, a homeless encampment opens up. What's going to happen to the value of your house? It's going to fall, right? You can't do that with Bitcoin. You can't. There's no physical location for Bitcoin. Bitcoin is completely neutral. It has no CEO. It has no company backing. It has no product. None of that applies. And most people haven't figured that out yet.
Interesting. And I love that you have spreadsheets, because it's so nice to see visual examples. And I want to dig a little more on inflation and the purchasing power. So one thing that we get taught in our econ and our finance classes at uni is that inflation keeps the economy going. It keeps the cash flow entering the macroeconomy. So why do you think this is still getting misunderstood? Because at Bitcoiners, we see inflation as totally negative. I mean, we don't see any pros to it at all. But traditional finance and econ tends to be different.
Yeah. So there's a lot of people who tell you that, oh, inflation is good for you. A little bit of, I can find a tweet right now where this guy says, oh, a little bit of inflation is good for you. Don't get brainwashed. Deflation is bad for you. But the reason why we believe that is because the current financial system relies on inflation. If there was no inflation, why would you take on loans? You're not going to borrow money. You're not going to go to your bank and get a loan to buy a house, for example. And the current financial system is basically built on housing, right? Every loan that you have is essentially built on housing. And then what that does is it allows the wealthy to keep buying and borrowing and doing whatever they want to, while the poor have to think about every single decision before they make it. So, and what I mean by this is, let's say you have $1 million portfolio of housing. You can go to your bank and you can take on a 10% loan to value loan for $100,000, and you can buy whatever you want with it. Your bank will gladly give you that money. Whereas, let's say somebody poor, if they don't have any assets and they're just working a job, let's say they're making $50,000 a year, it's going to take them 2 years to get that $100,000, and they're going to have to pay taxes on it. Whereas the rich, when they borrow money, they don't have to pay taxes on it. And then over time, as the rich borrow more and more money and they dump it into the economy, the value of their assets keep going up. So the entire system, the inflation, all of this ties in, and it makes it so that the wealthy get wealthier and they keep getting richer and they keep getting richer. So in the legacy system, even for the CFA, for example, we're told that inflation is good for us, whereas in reality, it's not. The majority of people just think that inflation is great because if prices go up, it means the economy is getting stronger. But that's not the reality of it. The inflation rate that's actually happening in the system is much higher. And there's a book from Jeff Booth, The Price of Tomorrow, really great book. He talks about how the economy is supposed to be deflationary. He talks about the natural state. What is it? The natural state of the economy is deflationary because what I took away from this is that if you're a successful entrepreneur, your goal is to create abundance. If you can't create abundance, you're not going to be successful. And creating abundance leads to deflation. So if you connect the dots there, being successful means that you're creating deflation. You're making it so that whatever you have is accessible to more people. So let's say, for example, Amazon. Amazon made it so that way more people can have products and services through the internet, or they can have a product delivered to them through the internet. They just order it through the internet, they pay for it through the internet, and they get it delivered to their house the next day. What that did was it made it so that shipping goods and services, 1-day delivery is abundant and it's available for everybody. Right before Amazon, Jeff Bezos wasn't a billionaire. From what I know, at least. And he wasn't one of the wealthiest people in the world because he didn't create abundance at that point. At that point, he was working at a hedge fund. Once he created abundance, once he made it so that everybody can buy the things that they want, he became a billionaire because he created more value in the world. And technically, he would have created deflation if the system wasn't designed the way that it is. If it wasn't designed to just allow us to create more and more money and put it into the system and keep increasing the prices of everything that we want, because in this system, we're able to get instant gratification and we're able to bring our future consumption to the present. This is a completely broken system. It only hurts the people who are saving in the currency. But if you save in assets, then you're good, right? If you think about it, all the people who tell you that inflation is a good thing, they probably own a shit ton of assets, right? They probably don't own cash. The people who own cash are the ones who know that inflation is not a good thing because their expenses keep going up, and that's the majority of people. The majority of people on earth can't own assets because you can't access assets. Most people aren't rich enough to buy assets. So I have a friend in Nigeria. In Nigeria, all they save in is cash or real estate. They don't save in index funds. Index funds aren't available for them, right? And then with real estate, you have this massive barrier to entry where most people can't buy index funds, right? Real estate. So let's say, for example, somebody your age, I don't know if you have enough saved to buy a house. Maybe it'll cost you like $100,000 up front, right? You can't get access to that market if you don't have those savings. Whereas, let's say some wealthy person who has a house, they can go to the bank and they can borrow against that house to buy another house. Then they can go to the bank and they can borrow against that house to buy another house. So this is a really scary situation to be in, especially for younger people. I'm a millennial, and in my generation, most people can't afford houses and they're struggling. They're living with their parents. I think the number of people who are 30 and older and living with their parents has just been rising, and it's melting up essentially. And that'll just keep getting worse, right? And it's because of this broken system. It's because our income hasn't risen while our expenses continue to rise. If So inflation is good for the wealthy. It's good for the top 1%, the top 0.1%. Deflation is good for everybody else. And I don't think that that's the system that the wealthy want. The wealthy control the education. The wealthy get to tell you what you want. And I'm glad that you're not just brainwashed by the system because you're asking these questions.
Yeah, it's a very nihilistic time, I think, to be growing up, because you see the prices of housing going up and going up at exponential rates at that. And you see, wages and comps just not being the same. And what was it? The inflation rate in 2022 in the US was what, 9.2%?
Yeah, something like that.
That's not a normal metric, right? Like
Crazy.
that's absolutely insane to be seeing, especially when you're, graduating high school and going into college and trying to envision what your future is going to look like. So with that, then let's talk a little bit about the difference between the current system that we have and what the world would look like if, we were completely in a deflationary economy, if we were on a Bitcoin standard even. For Gen Z, who's saving and investing, how would that differ if we were, saving in cash and maybe the S&P 500 or Vanguard in our current economy versus if we just decided to start saving in Bitcoin?
So I think that most people would be able to retire a lot sooner than they expect. I actually just recorded a video where I was talking about how most people think that retirement is an age because their government tells them that's what it is, right? They think that, it's 65 because that's when my government's going to allow me to retire. But with Bitcoin, I don't think you're going to have that restriction. You're going to be able to retire whenever you have enough money to pay for your expenses. So let's say, for example, in this case, um, with the stock market, you need something like 25 to 30 times your expenses in order to retire. Because at that point, you can take out 4% of your portfolio and you can pay for your expenses going forward for however long you need to. Whereas with Bitcoin, so I ran some of the numbers, and I think that if you have about 10 to 12 times your expenses, you can retire compared to 25 to 30 times. So 10 to 12 times versus 25 to 30 times. And even then, even at 10 to 12 times, you may want to wait a little bit. Maybe you want to get to 15 or 20 times, right? But at some point, you're going to be able to retire and you're going to have to have a lot less assets than you would with the legacy system. So I think what it's going to do is, in the current system, people are stressed out. I think a lot of people hate it, right? I don't think that people want to live in this time because of how expensive it is, right? I think with Bitcoin, people are actually going to love their lives. Like they're going to enjoy their the way that they're living. They're going to enjoy what they're doing for a living. They're going to enjoy just doing the things that they do day to day because they're not going to be struggling for money. They're not going to be able to. They're not going to struggle. Sorry, they're not going to struggle just to make ends meet. And have you seen the Maslow's hierarchy of needs chart?
I have.
So what I'll share it on my end here. But what I wanted to show is that with the current financial system, you have with the current financial system, I think people are just struggling to reach the bottom, right? To fulfill their physiological needs. With Bitcoin, I think you're going to be able to get way higher on this chart. I see this almost like a ladder. With Bitcoin, you're going to be able to get all the way up to self-actualization and esteem and love and belonging. Whereas in the current system, you're struggling to even pay for shelter, right? If you don't have shelter, you can't sleep well. How are you going to sleep well if you're homeless, right? If you're in a homeless shelter, how are you going to sleep? You're going to always be thinking that, somebody's going to rob me. Somebody's going to jump me. Somebody's going to shoot me or something, right? You're always going to be worried. You can't even have proper clothing in this system because things are just getting way more expensive. And again, that all leads to reproduction, right? If we don't have kids, how is the economy going to grow, right? How is the system going to get any better if we don't produce more? If we can't produce more goods and services for our people, then we can't afford to reproduce. And that's why you're seeing that the fertility of the birth rates. I think that's what it is. But the number of kids that people are having is dropping, and it's going to continue to drop because of fiat, because people can't afford their future. If you can't afford to live, then how are you going to afford to support a child? I think that what's going to happen is we're going to see a lot more people who actually like their lives. We're going to see a lot fewer just petty crimes because today people need to commit crimes just to pay for the basics, right? If you're just if you're homeless and you don't know where your next meal is going to come from, and you see some guy walking down the street wearing a Rolex, you're probably more likely to rob them than if you had your meals paid for and if you lived in a great house and you had a family and you have friendship and you have all these things that you need to be a human. And that's what Bitcoin does. Bitcoin gives you the ability to rise up on this hierarchy. In the fiat currency system, you can't. It's impossible.
Yeah, it sounds like an absolute utopia. I mean, being able to come back to a world where a home is simply just a roof over your head and not something that you use as a store of value. And,
Yeah.
having a family isn't something that you have to worry about, and it's something that you can actually achieve. That's what a lot of Gen Z wants, right? That's what a lot of, even millennials, that's what we envision for our futures.
Yeah.
But it's just, I mean, it's near impossible. And we're seeing this rise in just financial nihilism and people just losing all hope completely in the money, in investing, and even in saving. A lot of my friends, they don't have savings accounts, or if they do, it has like 100 to 200 Australian dollars in it, which is not enough for a savings fund. That can barely get you anywhere should
Yeah.
you need to tap into it. Why do you think we're seeing such a rise in people losing faith in being able to have that future that they envision for themselves?
I think that it's a self-fulfilling prophecy, right? So people are losing faith and they're saving less, and then because they're saving less, the inflation rate is going up. Because the inflation rate is going up, they're saving less, and they keep losing faith, and it keeps getting worse. But that's the thing, right? With when you have fiat, when you have fake money, that's what I consider fiat to be. I consider fiat to be completely fake money. When you have fake money, then how are you going to plan for the future? Because you don't know what the inflation rate is going to be. So let's say, for example, somebody your age, if you're planning to retire at, let's say, 65, 40 years from now, how do you know what the inflation rate is going to be? How do you know what your cost of living will be? So you might as well just spend your money today. What's the point of saving if, let's say, you're getting a 10% return on your investments and your inflation rate is 7%? In reality, I think it's higher than that. You're getting a 3% growth. What's the point of saving? There's no point. And then because of that, we see things like people just having, they're just thinking about, they're thinking about instant gratification, and delayed gratification isn't worth it because it doesn't pay you anything. So what Bitcoin does is it has that built-in reward for delayed gratification. It just compounds in, it just keeps compounding and compounding. Whereas with, let's say, real estate, you need to get cash flow from your real estate in order to survive. Because with real estate, you have to pay for maintenance, you have to pay for repairs, or let's say you want to replace a roof. It'll probably cost you more than the entire price of the house in like 1980, right? So let's say in 1980, the house cost you 25 grand. Today, it's going to cost you $100,000 to repair the roof, which is crazy. It sounds insane, but that's what's happening, right? So why would you want to save for the future if you can't even afford to pay for your present? If you can't afford to pay for food, and food is one of the things that we need to survive. We need energy, right? We need electricity. We need heat. We need AC. We need all that stuff. If you can't even pay for the basics today, then how can you save for the future? It's impossible. And that's what makes it so that the wealthy just keep getting wealthier, because the wealthy can afford assets. They can afford to buy multiple rental properties. They can afford to buy any stock that they want to, whereas the poor can't. So what's happening here is there's a bigger and bigger wealth transfer from the poor to the wealthy. And there's something called a K-shaped graph where one group of people or one industry keeps growing, and then the other industry, if you compare two industries or two groups of people, one group is doing really, really well and the other group is doing really, really badly. So what we're seeing today is I saw this statistic where it said how 70-year-olds are more likely to buy houses today than 35-year-olds.
Oh my gosh.
Right? That's crazy. So 70-year-olds are buying more houses today than 35-year-olds. Who needs a house at 70 years old? You're probably either living with your kids, but most of these people aren't even buying those houses to live in. They're buying those houses as rental properties. They're buying them as investments. And people of your generation, people of so Gen Z and Alpha, Gen Beta, it's just going to get worse for them. It's just going to keep getting worse for them. And today, people are thinking of the future with a 2% inflation rate. Inflation is going to get way worse, right? If that number goes from 2% to, let's say, 5%, you're going to need way more money to retire than you can even imagine. And it's getting scarier and scarier day by day, because nobody can predict the future. Nobody can predict what's going to happen in, let's say, 10 years, 20 years, 30 years. Nobody has any idea really. And that's what's making it so that's what's making what you said there, people not wanting to save. Why would you want to save if you know that your money is just going to keep losing value?
Absolutely. And I think it's a tough time to be growing up in. And what I want to ask you now is, What can Gen Z do to start securing a safer future in terms of their finances? I know as we're 20 and in college, or not even working yet, or maybe we have a job and we're getting some stream of income. What is it that we can start doing?
I would say build skills. Build skills are probably going to be useful 10, 20, 30 years from now. I know it's hard to predict, but even if, let's say, for example, you build a skill and you start earning money today, put some of that money into Bitcoin because Bitcoin can't be disrupted. Everything else can be disrupted. So I want to share another spreadsheet here where I'll show you. It's my compound interest calculator. Not sure if your audience has seen it before, but essentially what this shows you is how much money you'll have in a few years, right? So let's say, for example, if you start with $25 worth of Bitcoin purchases per month. You're not going to get to, let's say, 10 Bitcoin or 100 Bitcoin, of course. But if you keep going, if you keep doing that, your Bitcoin is going to appreciate and appreciate and appreciate until it's worth millions of dollars, right? So this assumes that Bitcoin has a 35% growth rate per year. And I know people are going to say that this sounds ridiculous, but it doesn't, because the US dollar can keep losing 35% per year in terms of Bitcoin. It can keep losing 35% per year over and over again, literally forever. It can lose 99%, then it can lose another 99%, then it can lose another 99%, then it can lose another 99%. Because when you have an asset that loses 99%, there's still a 1% left to debase, right? And that's what's being stolen here. So if you save in dollars, you're going to see that your wealth keeps decreasing and decreasing and decreasing. But if you save in Bitcoin, eventually your wealth, the amount of Bitcoin that you buy, so in this case, $25 worth of Bitcoin per month. And actually, let me give you another example. So I know a lot of Gen Z, they want to buy their own houses, right? So in this case, let's say you want to buy a house and today it's worth 550K. It's nearly impossible for most Gen Z to save $110,000 to put 20% down on this house, right? But eventually, if you save $25 worth of Bitcoin per month, that stack that you accumulate is going to be worth 100% of the value of the house. So by 2049, the house will be worth something like $1.77 million dollars, or actually 2050. 2050, it'll be worth $1.862 million, but your Bitcoin will be worth $2 million. So that Bitcoin that you have, that $25 per month, will accumulate to more than the value of a house today. And what this is it's a wealth transfer from the people who own houses to the people who own Bitcoin. So Gen Z, anybody who's watching this, and yourself, even millennials, even Gen X, you want that wealth transfer to work for you, not against you. Like I said, this is a wealth transfer from the people who own this house, the people who spend $550,000 to buy this house today, versus the people who accumulate as much Bitcoin as they can over time. So that $550,000 house will keep appreciating, but your Bitcoin will appreciate much, much faster. And at some point, like I said, that house is going to be worth 0.01 Bitcoin, right? Today, a house is worth something like 4 or 5 Bitcoin. At some point, it'll be worth 0.01 Bitcoin. Then it'll be worth in the fractions of Satoshis, because housing can continue to you can continue to make more houses and add them to the economy, but nobody can increase the amount of Bitcoin that exists. So for Gen Z, for millennials, for Gen X, anybody who's watching this, just accumulate Bitcoin. If you have real estate, sell your real estate and buy Bitcoin with it. For Gen Z, like you said, what can Gen Z do to improve their skills, for example? I think one of the best things that you can do is try to learn how to use AI. Right? With AI, there's going to be a lot more things that come out in the next few years. Use AI to your advantage. I think that's the key here. Most people are so worried that AI is going to disrupt their career, but think more about how you can use AI to build your career. I think that's probably going to be the best decision that people make. And keep in mind that I'm not the best with AI. I'm not telling you that I'm the best with AI. I'm not. I'm still learning. And I think that no matter what happens in the future, AI will just get better than what it is today. So what that'll do is you have your Bitcoin stack, you keep accumulating your Bitcoin stack, you keep learning AI, and you keep stacking more and more Bitcoin over time, and nobody can disrupt your future. Nobody can stop you from being able to retire. Nobody can stop you from going work optional. Nobody can stop you from living the life that you want.
That's absolutely awesome. Thank you for sharing that. And it's so interesting to see that, even $25 a month can get us to millions of dollars in just some time. Because I did a video a while back where I said $10 a day in DCA can, get you to millions of dollars because of,
Significant
Bitcoin.
amounts, yeah.
Yeah. So It's interesting to see that, literally anything, literally any amount of money that you can save and put away is it more than enough for Bitcoin. But let's shift gears a little bit, because a lot of Gen Z that I know that I'm friends with are studying finance and economics and accounting, or things, in commerce right now in college. And it sounds like, Bitcoin, if it's here to stay, it might revolutionize what finance looks like completely. I mean, it might revolutionize Wall Street. So, do you see Bitcoin as competition to Wall Street or as its replacement entirely?
Well, that's a really good question. I think it's a complete replacement. I think that right now, let's say for example, banks are the base of everything, right? Banks rely on housing, so you keep your money at the bank, and the bank requires that you keep your money there because then they can make loans and they can do whatever they want to. Um, they can keep increasing the amount of money in the system. And if we stop relying on the money that they use, let's say for example, we stop relying on dollars and we stop relying on whatever fiat currencies that there are, I think that's going to lead to massive amounts of instability in the current system. So the people who are relying on, let's say, index funds, I don't know if those index funds are going to give them the returns that they want, right? So if as more people move their wealth into Bitcoin, because Bitcoin is the best performing asset and it'll continue to be the best performing asset. As more people move their wealth into Bitcoin, they're going to see that the legacy financial system doesn't even make any sense to invest in anymore. Because at some point, because Bitcoin is going to just massively outperform everything, owning houses won't be worth it. I don't think it will be, because if you own a house, your cost of living is going to keep rising. And what'll happen here is, like I said before, the current financial system is built on housing, it's built on banks and lending, and banks will just give you as much of a loan as you want to against your house. But over time, let's say for example, if people want to move into Bitcoin instead of housing, you're going to see the price of housing massively fall. You're going to probably see it fall to its utility value, which means that you'll see it fall to the value that somebody has to live in it. And I don't know if the current prices are justified in that case. So what happens here is the people who have mortgages through the current system, they may not want to pay back those mortgages, because let's say, for example, you bought a house for $1 million, you owe $800,000 on it, but now the house is worth 100K. You'd be better off just walking away from the house, right? So how does the investor trust the system? Because if they can't get a return on those investments that they make, and let's say they invest in banks and banks start collapsing, how are they going to trust that system anymore? How are the people who are saving going to save? They need to move to a different system. They need to move to a completely different system, because the way that I see it, fiat the way that it is today, or the US dollar the way that it is today, can't survive with Bitcoin existing, because fiat is completely imaginary. It's based on a fake reality. It has no real value. Whereas Bitcoin is a bearer asset. You can hold on to it. You can keep it in your. You can keep full. You can have full self custody over Bitcoin. You can keep the control over it to yourself, and you don't have to give it to somebody else. You have the choice to, if you want to. Let's say you want to buy ETFs, or you wanted to buy Bitcoin and you want to leave it on an exchange. You can do that if you want to, but you don't have to. You're not forced to. Whereas in the current system, you don't have those choices. So I think that Bitcoin is a complete replacement. I think that the world will go to Bitcoin, and why would you ever go back? I don't see a reason to go back to index funds or real estate investing, because all those things are way more risky. There's a lot more headache that you have to go through. Let's say you're a landlord. You have to deal with your tenant. You have to deal with lawyers. You have to deal with realtors. You have to deal with um, like taxes and all the stuff that comes with it. Why would you want to deal with that? I don't really see a reason to.
And what might these careers look like in the future? Investment banking, VC, accounting, all of that. Because a lot of Gen Z, right? They're studying it and they're envisioning very traditional paths for them to move forward. But if, as time goes on, we move to a Bitcoin standard, those jobs would likely look different.
I think that accounting, for example, will probably be replaced by AI or by some kind of technology. Because why do we? I feel like the current system is just, it's so complicated for no reason, right? You have so many tax breaks that you can get. You have so many tax loopholes. You have to go to a CPA. You have to pay them like thousands of dollars to file your taxes, which is absolutely insane. When with Bitcoin, I feel like it'd be so much more difficult for. I think it'd be so much more difficult for governments to track the income that you get, because if you get money on Lightning, for example, how are they going to track it? It's like a UTXO. I think it's called the UTXO sharing system. So you're sharing UTXOs with other people, so they don't know which Bitcoin you have. right? So I feel like things will be a lot more difficult for governments to. And this is specifically for accounting. I think it will be a lot more difficult for governments to track movements of money. So I don't know if accounting will be the same as it is today. There will probably be some kind of judgment involved, but I feel like at some point governments are going to probably go to like a flat tax instead of taxing you based on, let's say, the expenses um, that you want to put against your income, and you can cut down your expenses and all that stuff. I think things will get a lot easier, and maybe we won't need accountants the way that we do today. Um, VCs, I feel like I don't know if it makes sense to be a VC anymore because you just buy Bitcoin. I mean, you can probably get higher returns from investing in some random company, but you're also taking a lot more risk, right? So I think that a lot of those jobs will probably not be as common. I don't think there's going to be as many venture capitalists. I don't think there's going to be as many just companies that are being invested in by gamblers in a way. I would consider them gamblers personally. But I feel like I don't know. I don't think that's going to be the case anymore. I feel like we're going to be more focused on doing the things that we need to survive as humanity. So let's say trades will probably do really, really well, right? We're always going to need plumbers. We're always going to need people to do all the things like building houses, for example. Of course, AI may replace that, robotics may replace that, and that may be something that people may want to go into. That's what I was saying. Learn AI, learn. I don't know if it's worth learning how to code anymore because AI. You can. There's something called vibe coding where you tell AI to write code for you. And one of my friends, Forrest, he does that himself. He makes his own websites. I don't know if coding is as valuable anymore. Of course, it is valuable because you want to build the programs that are required to get to that point. But at some point, the people who are software engineers and the people who are building all of the infrastructure that we'll need in the future, they're going to be obsolete because their job is going to be done by the AI that they created or by the technology that they created. So I think that I think probably just the basics that we need. So let's say growing food, that's going to be key. And I think farmers are going to get paid appropriately. I don't think that they're going to be screwed over like they are today. They're not. They're today. They're getting paid in fake money. At that point, maybe they'll get paid in Bitcoin, and they'll be able to stack as much Bitcoin as they want to. Building houses will be very, very valuable. I think, unless let's say, for example, we already have too many houses, or let's say robotics makes it so that we can build houses faster. Maybe at that point that'll be different. So I don't. I feel like there would be a lot. Let's say the trades will be very valuable at that point. I think like software engineering that may not be as valuable as it is today. Um, Growing food, real food will always be necessary. You can't really scale up the production of, let's say, apples or chickens or eggs, right? You can't scale that production up. I think more and more people will. So that I guess that's where that K shape goes, right? That K shape recovery where there's very wealthy people who keep getting wealthier, very poor people who keep getting poorer. The poor people are going to keep eating, let's say, manufactured foods like 3D printed steaks or um, pasta made of like insect flour or some shit like that. But the wealthy people, they're going to keep demanding really high quality foods and high quality products. So the people who have those skills to produce those high quality products will probably do very, very well.
It's interesting that you say that. So, last thing on AI and this topic then is, do you think as we see the introduction of AI, we're going to see more jobs being created, or are you thinking there's going to be less jobs?
So I guess it depends, right? I feel like there's going to be a lot more people who are able to. So I have a friend who runs his own business and he does everything himself because he's really good with AI. He probably replaced like 15, 20, 30 full-time employees just with AI, right? But because he's using AI, he's able to run his business. So I think what's going to happen is there's probably not going to be as many jobs, but there's probably going to be a lot more opportunities for people to build their own brands, right? Like what you're doing here. You're building your own podcast, you're building your own brand, and you're using your skills to your advantage, right? Nobody can replace you being you. Nobody, like I have my YouTube channel, nobody can replace me being me. But on the other hand, let's say you do a typical job. Let's say the job that I was doing before, I was working as a fixed income analyst. Anybody could do that, right? The job that I was doing was, I mean, I consider it to be worthless, right? To me, it wasn't worth anything because all I was doing was getting these wealthy people a 1%, 2%, 3% return. Anybody can do that. Anybody can go into those jobs. Anybody can do the CFA. The way that I see it, there's going to be less jobs and more people just doing the entrepreneurial stuff. So they're going to be starting their own businesses. They're going to be creating value in their own way, which is going to be a lot more valuable for society.
And with that, just to wrap things up here, what advice do you have to Gen Z overall, but more specifically those studying econ and finance right now?
I think the economic system is a failure, right? If the economic system was succeeding, then we wouldn't be in the situation where Gen Z, millennials, Gen Alpha, Gen Beta, all the generations later on, if the economic system was a success, then these generations wouldn't be struggling, right? Today, everybody who's 40 and under is struggling like crazy. People even 50 and under are struggling. So I think that the economic system is a failure. I think it's broken. And I think we need to change our lens. I think we need to get away from that fiat way of thinking. Right now, we know that no matter what it is, no matter what the problem is, we can just throw more fiat at it, right? That's the way that we think today. We think that inflation is a good thing. Modern monetary theorists, they've just completely gone crazy. And I think that that's what the system is built on, right? The system is built on this fake money, and most people haven't even imagined what would happen if we replace the money completely. And what I would say for Gen Z is accumulate Bitcoin, because you have that opportunity right now. In a few years, you won't have that opportunity anymore because you're going to be working for Bitcoin instead of accumulating it. You're not going to be able to buy it because at some point, fiat is going to be worthless and more people will realize that it is worthless. People won't want fiat for their Bitcoin. So I have this thing that I always say on my own channel. I say that Bitcoin will run out at every single price. No matter what the price is, at some point, that price is going to be a rounding error. So today you see 124,000, 123,000, whatever it is. You see it as just this really high price, and most people think that they can't afford it. At some point, $125,000 will be a rounding error. You're going to see Bitcoin's price moving by $125,000. At some point, it'll be moving by that much in a month. Then it'll be moving by that much in a week. Then it'll be moving by that much in a day. Then in an hour. Then in a few minutes. And you're going to see that $125,000 was extremely cheap. And you have this opportunity today to stack Bitcoin at that price instead of, let's say, somebody asking you, oh, would you go back to 2025? Let's say in 2035, somebody's going to ask you, would you go back to 2025 and buy Bitcoin for $125,000? Make sure that you're in 2035, make sure that you're saying, I already did that, so I don't have to do that. I don't have to go back in time because I already have enough Bitcoin. I already stacked it. I did what I needed to build this wealth, and now I don't have to rely on some imaginary time machine to build my wealth for me.
If you're watching this, I don't think I could have put it into better words myself. I mean, work for your future self, right? Do the work so that, like Rajat said, you're not worrying in 2035 and wishing that you could go back 10 years. And definitely go check out Rajat's channel. I mean, he has some incredible breakdowns. And if you're a numbers person and you enjoyed seeing, the formulae for the discounted cash flow and the NPVs, he has a lot more of that, and definitely go check it out. I mean, I personally, I love seeing all the little breakdowns, and I get to see the numbers and then add them into my own little conversations when I'm trying to orange pill my friends. So with that, Rajat, last question, and I like to ask this to everyone who comes on my channel. And the question is, if there's one resource, like book, podcast, anything that you could recommend to Gen Z or anyone who's starting to learn about Bitcoin, what would you recommend?
So I have two books that I like to recommend. And I don't like reading. I like audiobooks. And both of these books are available as an audiobook. So one of those books is, of course, the Bitcoin Standard. What the Bitcoin Standard does is it gives you just a background of Bitcoin, and it goes into detail, but I feel like you need to go into a lot more detail on your own. What it'll do is, if you're an analytical person, you're going to ask a lot more questions. So you're going to read something, you're going to ask a question. You're going to read something else, you're going to ask another question. And it's up to you to really go deeper and deeper. And I feel like reading that book really changed my perspective of the world. It changed my perspective of money in general. And the second book that I recommend is called Mindset by Carol Dweck. So if you have the wrong mindset, you can't do anything. You can't succeed. You're going to fail. No matter what happens, you will fail because so there's a really great quote, your thoughts become your actions become your words, or whatever. Whatever that quote is, if anybody can go and Google it, find it, you'll find it somewhere. But essentially, the way that you think turns into who you are. And that's what I got from that book, from Mindset. If in Mindset, so in that book, they talk about a growth mindset versus a fixed mindset. If you believe that you can succeed, then you will. right? If you believe that you're going to fail, then you're going to fail. You're not going to do the things that are required to succeed, right? And I think reading those books really pushed me into the entrepreneurial side of things. I feel like that's required. The right mindset is required to be an entrepreneur. If you can't, if you don't believe that you're going to succeed, then you're not going to. You're destined to fail. And that book got me to think this way. I also recommend. There's this podcast from this guy named Naval Ravikant. It's how to get. I believe it's called How to Get Rich. It's really good. It's like 3.5, 4 hours or something like that. I think I've listened to it like 5 times. Every time I listen to it, there's like some nugget that I didn't get the first time, and it just. I think that's partly what got me to start posting on social media, and then mindset got me to keep going, and then Bitcoin got me to change from talking about social media or from talking about index funds and real estate to talking about Bitcoin. So I would say use those three resources to your advantage. Number one, the Bitcoin Standard. Number two, Mindset, the book. And number three, How to Get Rich by, it's a podcast by Naval.
Right. Awesome. Well, I'm going to link all of those resources in the description and add them as cards as well. And I mean, I've read the Bitcoin Standard. That was the first book that I read, and I absolutely loved it. It really is a game changer. But I haven't read Mindset and I haven't checked out the podcast yet. So I know what I'm
Really
doing
good.
later today. With
Awesome.
that, just to close things out, Gen Z, everyone who's listening, literally even the people who built their careers in traditional finance are realizing that system was never built for us, right? It was built to help the rich get richer. And I think that Rajat's story really just proves that, finance isn't about chasing yield. It's more so about understanding the money itself. So thank you so much for tuning in. And Rajat, thank you so much for coming on as well. This was an awesome conversation.
I really appreciate you having me. I enjoyed this a lot.
And if there's, anyone watching this who has questions or wants to reach you in some way, is there somewhere they can find you?
Yeah, I'm on X, I'm on YouTube. You could book a one-on-one call with me. You can join my school community. Quite a few things, definitely.
Awesome. And with that, I will see you all next week. And until then, stay curious, stay skeptical, and stay orange pilled.